Well, the market's pricing that now. Look, let's just talk to the jobs data number here. Australia has a sampling problem. Let's be clear about this, is that when you're trying to sample households, the ABS has said they've changed their sampling method. So let's not try to read too much into monthly jobs data here in Australia. Okay, but what is clear is Australia's creating more jobs than what people expected. If you're a bear, like some people in Australia believe rates are going even lower in the medium term, they'll point out that construction's already peaked, those jobs won't be there next year, this is all temporary. But to be honest, we wouldn't have foreseen this level of jobs growth ourselves. The market didn't foresee it, the market had rate cuts in there. The RBA correctly did foresee it in some respects. The RBA was never quite as bearish on rates internally, and their communication has been reinforced by this data. At the moment, if things keep going the way they are, you've got to say we're at the bottom of this mini cycle. Are we at the true bottom of a cycle? I'll give you one stat. So the terms of trade that we just lived through, terms of trade being, for your viewers who may not be aware of it, it's a ratio of your export prices to your import prices as a proxy for the gross domestic income rather than gross domestic product. It tells you how wealthy you're getting. How many widgets can you buy for an Aussie dollar or a crate of iron ore? When you have terms of trade shocks as big as this, you've always had a recession. So historically, and I refer to this, history is not always the best way to use things, but it gives you a quasi-guide. You generally end up with a recession at the end of this. So you'd be a betting man to say that we get through this and never have a recession at the back end of this. We truly would be the lucky country at that point. What it would say is Australia's done a much better job at rebalancing than what the bears would have thought. Tourism jobs are up. You only have to go out in Sydney or in Brisbane to see. Now I see that there's new flights coming into Sydney from a couple of Chinese cities that most people in Australia have never heard of, like Fuzhou and Xiamen. That we have done a much better job than what I even expected. Construction, unlike the UK, when they cut rates, they just paid more for each other's houses. Australia's paid more for each other's houses, but we're actually building houses. And to build houses, you need people. So we've done and there's talk under the new government, under Malcolm Turnbull, that we're going to have the infrastructure. Infrastructure tends to require jobs and people to go into these things. So we're doing a much better job than even I would have thought. So two things on the dollar. It's always got to be careful what you compare it against. So we talked about US dollar strength. So even if the Aussie goes up against, say, the yen or the euro, it's probably not going to go up that much against the US dollar. Because even if we go to having no more cuts to maybe even a hike in a year's market's not pricing that yet, but say we went there, the US will be hiking anyway. So for us to hold our own against the US dollar will actually be a really good outcome. I think, we're probably done for the moment. Currencies trade off two things for Australia in particular: terms of trade and rate differentials. If rate differentials are coming in versus most of our peers, so i.e. we no longer have cuts, but Europe's now having cuts, it's hard to see the Aussie going much lower just on terms of trade. So they'll offset each other. Whilst we're 5 to 10 years still probably bearish on the Aussie dollar, for now it's done largely. It might even go up on a TWI basis.